Hello, this is Mike with the NetPicks Options Academy. This is the midweek recap for Wednesday, December 2. So coming into this week, we were coming off of a holiday shortened week last week because of Thanksgiving. We were expecting a slow start to the week as everybody kind of gets settled back in from traveling and from the holiday. And that's exactly what we got here on Monday and Tuesday. Markets were pretty slow. We kind of saw the grind to the upside here yesterday. We got a slow start to the session today as well on Wednesday. Boy, did that change when we hit lunchtime. We kind of saw a slow grind higher initially right at the open this morning. Then we hit late morning and it was pretty much a drift lower the rest of the day. Didn't see anything extreme. We didn't see any type of selling extreme this afternoon. It was just kind of steady throughout the day. So definitely good to see, which we'll talk about in more detail here over the next few moments. It's really going to set us up nicely for the next couple of weeks. So let's go ahead and take a look at the market as a whole, big picture. You can kind of see, we've talked about this in previous videos. You can kind of see this uptrend that we've been in for the last couple of months. I mean, we're a stone's throw away from all-time highs. We're starting to get to levels now where the leadership is starting to dwindle, meaning that the leadership here just this week, it's been Netflix, it's been Google, it's been Amazon. You start to take some of those big time tech leaders out of the equation, and we've got a totally different market. So it's a pretty dangerous spot to be in. Okay, what we want to see in a good healthy market, where if we're going to break out to the upside with follow through, I want to see broad-based buying. We have not seen that. We've seen the financials pretty choppy here of late. And when you start to lose some of that leadership, you can definitely be in store for some selling. Now, that does not mean I'm talking about looking for a collapse or a market tank here over the next couple of weeks. That's not what I'm saying. I'm looking for a nice, healthy pullback over some overbought levels. So the selling today, we actually saw a close near the lows of the day. I talk to my students about this all the time. The close is absolutely key. Okay, a lot of times when we get the selling pressure in the middle of the day, we bounce into the afternoon. We get the buy the dippers to come in. We see the short traders cover their shorts into the close and we rally. We didn't see that at all today. So I think that's pretty important. Now, we did close right on top of some key support levels. You can see here on SPY, we closed right on top of the 20 period moving averages. That's very key, both the simple and the exponential moving averages. Very, very key for the bulls to hold those levels tomorrow. Okay, if we start to break some of these support levels, okay, there's just a ton of room here on the downside. And another red flag is, you've probably seen it yourself, just looking at different emails that you're getting or looking at CNBC, Bloomberg, Yahoo Finance. Everybody is expecting us to make new highs before the end of the year. Everybody's expecting the Santa Claus rally, the market's super strong, we're going to keep going up on a never-ending basis. And a lot of times when the boat gets that loaded on one side, it means trouble. The market likes to make as many people pay as possible. Okay, so if everybody's bullish, if everybody's expecting the same situation to play out, oftentimes you'll see the exact opposite. Again, only time will tell to see if we can get some selling here over the next couple weeks, but it's definitely healthy, because what you're typically going to see on the downside, you're going to see volume jump. You're going to see volatility jump. Okay, we saw both of those today. We saw some good volume in many of the names that we track. We also saw the VIX pop up into the 16 range. That's also good to see. I'd love to get us into the high teens, low 20s on the VIX. That would open up our playbook a little bit. So on the downside, you can see the different support levels. I mean, 208.50 all the way down to 206.60. I mean, we've got some support in that area there. If we rally back up, of course, we've got the last swing high here from a couple of weeks ago at 211.60, and then the high of the year back at 213.34. So just some levels to keep an eye on here over the next couple of days. Now, just taking a quick peek at the other index ETFs. Very similar stories. They're all moving. The Dow and S&P are moving in sync with each other. The Nasdaq, it has some room to play catch up a little bit. The Nasdaq has definitely been strong, and that's due to the leadership of Amazon and Google and Netflix. And so let's see what happens here on the Dow. We're sitting right on top of some support levels. Up above us, that 180 level, it's going to be a pretty tough level to crack for the bulls unless we start to get the volume to really kick in here. My guess is, we may get one more run to the upside here before the end of the year, but I definitely think we can see some selling pressure before we get that over the next couple of days. So you can also see here on the NASDAQ, We're super, super strong. I mean, did we get a little bit of a double top here today? I mean, we had a new high at 115.75. I don't know. I mean, we're right at that level that we stalled out at a couple weeks ago. So let's see. I mean, we have a lot of overbought names inside of the Nasdaq. So if those start to pull back, some of these support levels below us could definitely get tested. Okay, another red flag that I had here this week over the first couple of sessions of the week, the internals have been painting a very mixed picture. And when I say internals, I don't think it's enough to just come in and see where the index products close. I don't think it's enough to see that the Dow closed down 158, the Nasdaq closed down 33, the S&P finished down 23. I don't think that gives you enough information. By looking at some of these internals, you can start to see, was it broad-based selling? Well, the advanced decline line was at almost minus 1800. That's pretty broad based on the sell side. Did we have any selling extremes? Okay, we had almost five minus 1000 tick readings on the NYSE tick. That tells us that there were a few selling extremes throughout the day. The up volume versus down volume on the NYSE was minus 4 to 1. What that's telling me is there's much more volume on the downside than there is on the upside. That's also good to see if you're a bear. The reason I look at these internals, going back a couple of sessions, these internals, even though the market's been trying to grind its way higher, the internals have been less than stellar. Okay, which just kind of goes to show that's typically what you're going to see at the end of a trend. When the market starts to lose leadership on the upside, you're going to see those mixed internals, and oftentimes that's a warning signal that a turn is coming. And so far that's what we've seen. Now, the big wild card here this week, we've got a ton of news out. We had Fed speakers here today. We had the Beige Book this afternoon. We've got the ECB, the European Central Bank. We've got that big announcement tomorrow morning before the market opens on interest rates. We've got the big employment number out on Friday morning before the market opens. So there's catalysts here this week that could give us some big movement. So we can take a look at all these technical levels. We can take a look at overbought and oversold levels. But ultimately, in this current market, I don't like it, but it's the market that we're in. All the focus is on central banks worldwide and what they're going to try to do to prop these markets up. So we're going to have to take our cue over the next couple days from some of these big news events that are out, and we'll see how that plays out over the rest of the week. Now, fortunately for us, and even though the market's been a little bit slow and choppy over the last couple of weeks, we've had some really, really nice trades. Okay, so the approach that we've decided to take over the past couple of weeks, going back before the holiday, I talked to my students about cutting back on risk. Meaning on the upside here, on these new long trades that we got on many of the names on our list here over the past couple of weeks, I decided to cut back on my position size. I decided to take more vertical call spreads, buying call spreads there to reduce my costs. That way I'm protecting profits over the past couple months because we've had a really nice stretch. I'm reducing my exposure. I'm taking risks that I'm comfortable with, and I'm taking what the market's giving us. I did not think that, over the past couple weeks, it was the time to jump in with both feet and put on a 100% position size with super aggressive trades because the market's already made a nice move. And it was showing signs of getting tired over the past couple weeks. So a lot of these trades that I'm going to show you here, they've been some nice winning trades, but they were smaller position sizes for us. Okay, and again, it's just trying to take what the market's giving us. So here's BABA. Okay, we had this long trade. A lot of these trades look very similar. I mean, were they the cleanest setups? Meaning, did they trigger right in and go right up to target? No. I mean, we've had to be patient. It's been a test of patience big time. The market was extremely slow last week. So were these the largest winners in the world? No. But it just goes to show the versatility of the system. We can take what the market's giving us. We can adjust, to whatever the market's throwing our way. So here we had this long setup. Let me get my data box up and we'll take a look at some of these exact numbers. So we had our long trade entry point at 80.85. Our full target here was all the way up at 85.94. Okay, so we got up to a high of 85.82 here today. That's within 12 cents of a full target. The way that we teach our students, when you start to get 95% of the way to the full target, okay, you have a couple of different options. You can ramp the stop up, lock in a good amount of profit, and give it a chance at that full target. Or when you start to get that close, within a few pennies, just start to work your order. Work to get out of the trade. Start to work your exit order and see if you can get a fill. That's what I did on BABA today. I ended up getting out here this afternoon It was a partial profit. Did I book the full profit? Did I pick the exact high when I got out? No. I gave it a little bit of room to pull back, and I did get out this afternoon and booked my profit. So I'm out of the trade on my call spread. It's being proactive. It's using smart money management, to get that far to target. We've been in this trade now for over a week. Was I going to let this one pull back on me and give up all that profit? No. I have to pull something out of this trade. So nice winner there booked on Baba. We had another one. Let me walk through some of these trades that were closed out here today. Google is another one. We actually spent some expensive time here on Google in our training room today, walking through the different ways that you can use these option strategies to lower your risk. I mean, Google is almost an $800 product. It's expensive. The options are expensive. Well, there's different ways that you can use these call spreads to really reduce your cost. Okay, here's Google. Here's the long setup that we just got out of today. We had our entry point at 770.37. We triggered it into a long call spread here. I mean, this was a huge test of patience. Okay, we were in this trade again over a week. Okay, for some of you that might take longer term positions. It might seem like a long time, but for us and the way that we trade, that's a longer term position. That's a longer trade than we're typically used to on Google. We came in this morning. We did get a move to the upside, and we did hit full target. Okay, you had plenty of time. I posted it on Twitter here earlier this morning when we hit full target. Perfect trade for us. I mean, look at how accurate the system identified the top here. We were able to close out of our trade, book the profit before the selling really intensified this afternoon. So really nice winner on the call spread. And now we are flat on Google as well. So again, I mean, was I kind of scratching my head here and here whether, hey, should I hold through the holiday week? Should I not? Well, I trusted the system. I took risk I was comfortable with, and it was just a really, really nice trade there on Google. Netflix. Here's another one that was just closed out today. Okay, so we had this move to the upside. Very similar looking chart to Google, right? I mean, was this the cleanest setup? Did it trigger in and go right up to target? No, I mean, look at how many times we were underwater. We were underwater 5 or 6 times throughout that trade. Fortunately, we stayed patient. We trusted our system. We had our stop in place all the way down here at 119.22. We never came close to it, and we were able to rally up and hit full target today. Again, it was a longer term trade for us. It took a couple weeks. Was it the largest winner I've ever had on Netflix? No, but the patience paid off. I was still able to scratch out a profit in a pretty slow, dull market here that we've seen over the past week and a half. So now I am flat on Netflix also. Let's take a look at some of these ETFs. I mean, we've been talking about the gold ETF now for the last couple of weeks. Here's another one that we came down a couple of times. We had a couple of different chances to get out of this trade. Our full target was down at 110.50. We got this little spike down at the end of last week. We came in today. This whole time we were moving our stop down. We had our trailing stop in place. You can see the dots moving down here. We came down. We got to a low here today of 100.53. So within 3 pennies of a full target. When you start to see that, you have to book profit. Okay, you cannot let that trade come back all the way on you and give up all that nice profit that you worked so hard for over the past week or so. Okay, so we were able to book a profit there on GLD, and now we are flat. Gold and silver have definitely gotten beat up, as many of the commodities have. Over the past couple of months. So are we extremely oversold here on GLD? Yes. So I feel very fortunate that we were able to close out of that really nice winner on the downside. What about TLT, the bonds? What have the bonds been doing here with this market, grinding its way back up to highs? Well, we've got this long trade that triggered in last week. It gave us a couple of opportunities to get long in here. Our entry point was right here at 121.14. We triggered in. It's just hit first target here today, so now we've moved our stop up from the full level up to break even. We've got a full target up at 123.34. So any type of a higher open on TLT tomorrow, and we're probably going to be able to close out of that trade with a nice profit. Worst case, we're out at break even, so it's a good position to be in on TLT. What about the index products? A lot of these trades, again, I've been taking a lot of vertical spread, just trying to reduce risk. We almost got taken out of this trade here today. We had this long going from last week. Actually, it's over a week in now to this trade. We hit first target, our stop went up to break even. Our stop is, the system that has a stop at 208.02. I put the stop down at 207.90. I'm trying to keep it down below the 0.00 level. So I'm actually leaving a little bit of risk on this trade to see if we can use that support level as a last line of defense. Any type of a lower open in equities tomorrow, and I'm going to be out of this trade. Okay, so we're hanging on by a thread here with this long trade. Worst case, we have a break-even stop in place. QQQ, very similar. We were fortunate enough on QQQ here this morning. We did open higher today, and we just hit that first target level at 115.64. That was great because that allowed us to reduce the risk and move that stop up to break even. I was really hoping that was going to be the case. Just in case we did get the market to turn quickly, I didn't want to be caught with a ton of long exposure. So we were able to reduce that risk. And again, any type of a lower open tomorrow, and we'll take this trade off and we'll go flat on QQQ. Again, it just shows the flexibility of the system. Are we going to always book full winners? No, I wish that was the case. Are we going to have partial winners at time? Are we going to have break evens at time? Absolutely. But the key to the system is to take the setups as they come, adjust your position size accordingly to take risks that you're comfortable with, and then we can continue to react to the changing conditions over time. Another one that's really it has not been working out for us is Apple. So let's take a look here at Apple. We've had this long trade in play. I mean, if we go back to Google and Netflix and Baba, I mean, a lot of those charts we saw the slow grind higher. Apple has not been, joining the party there, joining the fun on the upside. So on this long trade, we're approaching a stop. Our stop is now down at 115.21. So we're still hanging on here. We're in our long trade. We're in a small long call spread here on Apple. We're going to continue to hold it until either the stop is hit, or if we do reverse back to the upside until one of those targets are hit. So we'll see. We'll see what happens if we do get that 115.21 level to be hit. That's our stop on the long trade. It's also an entry point on a new short setup. So we'll be able to react pretty quickly if we get some weakness over the next couple days. We'll jump into either a long put or a long put spread, depending on when the trade triggers in. We'll do that here over the next couple days if we get some selling pressure. Just taking a look at my list, let's go ahead and let's take a quick peek at one of our reversal charts. The charts that I've just got done showing you, those are our basic and re-entry trades. That's the main focus of our system. We also have a third setup type, and this is called our reversal trade. So no surprise with the market rolling over here today. We have seen some activity here on these reversal charts. Here on the Dow, we had this short trade that triggered in this afternoon. We had our entry point at 177.64, targets 176.44 and 175 even. Notice I did move that target up around the 175 level, just making a small adjustment there. And then our stops up at 180.04, which I also pushed up to 180.1. Just trying to stay clear of those 0.00 and 0.50 levels, which often act as support and resistance. So we had this trade here. I decided to go with a long put on this position. Why did I use a long put as opposed to a put spread? Because like I've been talking about in previous videos, I want to be more aggressive on the downside. Our trades oftentimes on the downside, they happen quicker. Our holding times are shorter. So if I think that there's more room to the downside, if I think that it can happen quicker, I'm willing to roll the dice a little bit and go with a more aggressive strategy like buying a long put. A lot of people say you should never buy options, right? Only sell premium. Well, the reason I can't sell premium here is the volatility is so low across many of these products. The options are so cheap, it's hard to sell any premium here and really put the odds in your favor. So I'm buying a put here, looking for a quick move to the downside. Typically, when I go ahead and buy a put, I'm trying to get a couple strikes in the money. That's typically what I'm looking for. And for me, I'm typically looking for between 20 and 40 days left before expiration. That's typically the criteria that I'm looking for when I take these trades. So we'll see what happens. I am short, and now we just need some follow through. I know that's asking a lot in this market here. It's been super, super strong over the last couple months. So we'll see how that plays out here on the Dow. I showed you, let's go ahead and take a peek at the financials and then we'll wrap this video up. So here on Goldman Sachs, we just got taken out of this long trade at break even today. So here again, here's another trade where we were fortunate enough to hit the first target on this, but we just didn't get quite the push that we needed to hit full target. This was one of my warning signals. here coming into this week, the financials they've been struggling to break out higher. It's very difficult for the market to make a big move without participation of the financials. If those are not leading the market or not participating, it's going to be hard for the market to ignore that. So the financials rolled over here today to the downside, and I did get taken out here this afternoon on Goldman Sachs at break even. So I will definitely keep a close eye on some of these names. For me, the financials that I look at, I trade Citigroup and Goldman Sachs, so I'll be watching those closely to end the week to see what happens on both of those. All right, so my plan of attack, again, a lot of news out here the next couple of days, before the market opens. It's really crucial to get in and kind of see what this news does. If you're not an early morning person, make sure you are over the next couple of days, because tomorrow the ECB out with their statements, and then we had the big employment number on Friday, so we could have some fireworks for sure here over the next couple days. So I'll be back over the weekend to take a look at see how some of these open trades have closed, where the market's finished the week. I would love to see some selling pressure over the next couple days. I want to see some follow through. If we just roll right back to the upside, if we continue to plow higher, I think that's going to be tricky heading into the end of the year. I think if that happens, you're going to see the volume just drop off a cliff. And for me personally, I'd like to sneak in another couple weeks of some good trading before the Christmas and New Year's holidays. So we'll see what happens. As always, if you have any questions on anything I covered, if you'd like more details on our indicators or the systems that we use, feel free to send me an email, mike@netpicks.com. Be more than willing to provide some more information to you. So I'll go ahead and wrap this video up here. Good luck over the next couple days as we wrap up the week, and I'll be back on Saturday with a full recap of the week.